What's going on, everybody? It's Jake back again, and today we're going to be looking at a AUD USD sell. So today we're going to be looking at a trade breakdown of selling the Australian dollar against the US dollar. And as you can see, just jumping right into it, we have a pretty steep downtrend on the 4-hour chart. So the bias on this is obviously short, even though we are making some gain, not very much though, on the 1-hour chart, just slowly climbing up. But as you can see with that black moving average on the top of your screen, you can see it's acting as a pretty significant resistance. So right now I'm just drawing this main trend line to show the bottoms and a potential take profit area. And this is using the bar replay tool. So right now we're at modern time of exactly where I was looking at the chart. This is not present time. So we kind of have this descending structure forming. We have the lower highs and we have the red 50 moving average on H1 crossing over and creating some resistance. And I'm just going to draw out some zones real quick just to kind of mark up potential, again, take profit zones, liquidity grabs, stop loss hunts, and potential resistance zones to move a stop loss above. So the main reason for taking this trade today was the NFP data that came out at around 8:30 a.m. Eastern Time. We were expecting strong job numbers, which in turn would have strength for the US dollar, and in turn, consequently, gold and other risk currencies would be going down. The AUD has been going down quite poorly over the past couple days or weeks or so, considering they are going through all kinds of COVID restrictions, COVID lockdowns, poor numbers through and through. So Australia is not doing too hot. So again, the whole goal of Forex and whatever you might be trading is to get something that is of high price and something of low price. So a strong currency and a weak currency. So as you can see, jumping right into it, if we draw a Fibonacci from swing high to swing low, we have a nice 50% retracement. We're just going to go bar by bar right now. And this candle right here is exactly where I placed my first trade. I wasn't really expecting it to go too much higher. However, once that 9:30 and data bell rang, I knew that there could be some volatility in price fluctuation. So right now we have the stop loss right above the 88.6, and we have our take profit right around the 127% Fibonacci. That's exactly where I was thinking at the time, although I was eyeing that trend line, as you can see, as the main take profit zone. So about a 2-to-1 risk reward ratio to start with this first position. And I just draw one more zone right here as a potential confluence. So as you can see, we're bouncing off 38.2 in the 50% rejection, hopping back down to a lower time frame to get a more clear picture. We can see on 30-minute it's now retesting the 100 moving average and the 50 moving average. Right here we see a massive candle where it did look like it was going bullish for a second, but the Fibonacci clearly shows that it bounced right off the 61.8, the clockwork. So this is where I placed my second position. This is very clearly a liquidity grab stop loss hunt, wiping out some of the sellers that had a tight stop loss to push price down even further. Really got to watch out for those. So it'd be wise to add your second position right there. Nice and easy. Now we're retesting on the 30-minute, that 600 moving average, but obviously as you can see there's a lot of bearish momentum, and on 15-minute we closed below it. So that's a good sign that we will probably close below the 100 moving, or the 600 moving average on 30-minute. So we got about a 16 pip stop loss roughly, and we are about 20 points of profit. And again, we see this happening. This is very similar to my last video. As you can see, we're bouncing off this support zone, but it's not a support zone where you're going to find massive amount of buyers. It is again going to be a stop loss hunt. I'm eyeing that 600 moving average again to be retested, and this is where I placed my third position with a little bit less risk. Again, stop loss, we're going to put that right above both the moving averages and right at the 61.8 zone roughly. So we're already 3 positions in, and our bias is confirmed, and the real move hasn't even started yet. But if you know what's going on with the data, you know that the data is going to be strong in favor of the US dollar. and Australia is continuing to be weak. It is just a perfect storm fundamentally and technically. So as you can see, it was a stop loss hunt. We close bearish and we melt right through the -27 and the 61.8. So at this point, I'm already pretty content with profit. I'm looking at these. I zoomed out real quick to kind of notice this on H1, but you could also see it on 30-minute. We're getting that third and final touch of the trend line, and I thought that, that might be a good place to potentially take profit. That last position is 28 pips in profit. The second position, which was at the highest price that we got, was at 46 pips in profit, and our original position was about 39 pips in profit. So overall, a lot of pips on this move, and we'll just kind of let the rest of the candles play out. So we're hovering around that trend line, eyeing that pretty closely, and this is when I drop back down to the 15-minute chart and I close out position because we kind of have some of the bearish momentum ending. It is also Friday. People are trying to close their positions, so I don't want to hold this over the weekend. You could obviously, but I wanted to secure the profits now in case if anything strange happened over the weekend. And I didn't point this out earlier, but if you look at this first impulsive move and you draw a Fibonacci on the 15-minute even, right in the middle of those wicks on the bottom and at the top obviously of the 61.8, you can see again a nice 38/50% rejection right on that moving average. So again, more confluence there of the 61.8 take profits and the -100 take profits. So looking at those two confluence of the -61.8s lining up, I knew that I was in a pretty good position to close out. Everything just kind of played super smoothly. Wasn't too much drawdown at all on any of these trades. And you can kind of just see from the top, you can just see all those wicks, on 30-minute and 1 hour. And if you're into chart patterns and market structure, you can kind of see that over on the left right here, this is, for example, a pretty large shoulder, and this is a pretty large head. And as you can see, we have the other shoulder right there and the fall down. An impulsive move to complete the chart pattern. And again, it takes a trained eye to see these things. It's not super easy to spot right off the bat, but over time, the market just starts to make sense. So I'd like to thank you guys for watching. I appreciate your time. Have a blessed one.